think Nvidia's up like 80%, right? You trimmed it.
Yeah. And you know what? You want to trim on strength. I want to be overweight things that are outperforming. And first, Nvidia became about more than a 7% position in our equity bucket. And so it just to trim makes sense. But it also, relative to the price of the NASDAQ, had broken out to record highs. And it sort of started surrendering that. The other thing I'm looking at is semiconductors broadly have sort of been consolidating, and they're not outperforming the NASDAQ anymore. Goldman Sachs research has said that hedge funds are short right now, and they're underexposed to the market. That keeps me excited. That's why I'm still holding overweight tech. And they've also said that over the last 5 years, 92% of the time, the hedge funds have held more semiconductors than they do now. That tells me that they're sort of defending the position right now. But if we start moving higher after earnings season, I see a capitulation and a massive short covering. So that's why I like it here, but I'm also being very cautious and starting to trim it.
Josh, what do we do with tech? I know you own Nvidia, and I'm not going to fault anybody. I know what you would say for taking some profits off a stock that's up 80% in a few months. I totally get it. But, now, as you said at the top, they're just the beginning of earnings season. We're going to really find out what the story is as, these companies continue to cut costs. What do we think about tech here after the run we've had?
So I think Bill is doing the right thing. If you're in Nvidia as a trade or like a tactical position, this stock has gotten very expensive. It is definitely far outrun any real change in fundamentals or even the outlook for this year. A lot of the excitement that's baked into that stock is like about the next 5 years, the next 10 years. So there's absolutely nothing wrong with having a huge outperformer and just making sure it doesn't get too big. So that makes sense to me. Broadly speaking, though, on tech, they've had like every tailwind imaginable at their backs. Number one, they're high-quality companies. Remember, we talked about that's what's in favor right now. Number two, tons of cash. They're not cyclicals. They don't need to go to the bank and borrow more money. Number three, the NASDAQ had a 35% correction last year. Massive bear market. It's unlikely that they need to do that twice, quite frankly, even if we are going to have an earnings recession, et cetera. So, like, you've had a lot of these benefits. So the real question is, like, how much of that have you already gotten as a shareholder this year? And unfortunately, you might have gotten most of that benefit already. So, look, a VIX with a 17 handle is not where that's so that we're in a high VIX regime, but we're at the low end of that high VIX regime. 17, 18 is as low as it gets given this current regime. So this is not where you get all bulled up on tech. So I think tactically, it's probably a smarter decision to be looking for what you want to trim versus what do you want to like initiate new positions in.
Yeah, I mean, it is unbelievable. Look at the VIX 17.7. Jason Snipe, Apple, Amazon, Alphabet, Microsoft, Netflix, and Nvidia. You trimming anything here?
So I haven't yet, and I think what Bill made, the decision he made is obviously a prudent decision. I mean, a stock up 80% within 4 months, not even 4 full months of the year is something that we need to make happen.
Are you not being prudent? I mean, what do you mean?
So
are you thinking about it yourself?
So it's something we trimmed it last summer. So we're looking to likely trim again this quarter. But for me, as it relates to broadly tech, and Josh just alluded to this earlier. I mean, listen, the NAS is up almost 16% year to date. The NASDAQ 100 is up almost 20% in the first quarter. These are great annual returns. So I think as we look at the macro environment going forward, is it prudent to invest in new positions in tech? I don't think so, not at this stage, given the macro backdrop and given where the Fed is. So that's really our position on it.